Hi, I'm David Bodamer, Editorial Director with National Real Estate Investor, here with Chris Setter at the MBA Commercial Real Estate Finance Conference. Chris is with Rockwood Real Estate Advisors. And Chris, you're going to tell us a bit about why don't you first start with what your companies do?
Sure. So Rockwood Real Estate Advisors, Rockwood, is the investment sales, mortgage banking, and capital advisory business within CW.
Okay.
CW is CW Capital and CW Financial. CW Financial is the Fannie Freddie agency origination business that's run by Michael Berman, and I know you'll be speaking with Michael a little bit later. And then CW Capital, the servicing, asset management, and special servicing business is run out of Bethesda. The senior gentleman there is David Iannarone, who is well known in the special servicing business. And it all rolls up to Chuck Spedka, who's based in New York, and Rockwood as well is based in New York. And so Rockwood, which is run by a gentleman named Dan McNulty, is now, since last May, the wholly owned advisory business within CW. And the role of Rockwood is to work with both CW Financial and CW Capital on execution strategies in the market. Right now the focus would be working with the special servicing business on assets that are going to be sold out of the special servicing business, either in REO or note form, for the best execution on behalf of the trust, the CMBS trusts.
Sure.
In addition, Rockwood is looking to grow its third-party businesses, again in the areas of investment sales, mortgage banking, and capital advisory.
Okay, so given your position in the market, given what you guys are doing, what are you seeing? What kind of volume of business are you seeing, and what kind of trends are you seeing?
Right. Boy, the answer is a pretty broad answer. On the sell side, I would say that we're seeing through the special servicers a lot of product.
Right.
If you look at last year's flows and you look at what's expected this year, and then of course the next couple of years with the maturities of CMBS and the obvious defaults, I think the volumes are going to increase dramatically. The number that's floating around CW right now from an execution standpoint is probably $2 to $4 billion of real estate that will get sold this year just by CW.
Okay.
And CW is just one of 4 or 5 large special servicers that are liquidating assets on behalf of the trust. So I expect that you'll see a lot of that volume picked up this year. The reality is that a lot of that stuff is smaller balance, sub $10 million, and so does it really qualify as institutional product on a go-forward basis? I'm not sure that it does. So from a flow side, that's what we're seeing inside the special servicing world. And then from a buy-side perspective, we're seeing a ton of interest. Buyers have a lot of capital. Pension funds, insurance companies have had a lot of money to put to work over the last couple of years. There's a lot of dry power sitting around, whether it's at the core funds or at the insurance companies or at the strategic opportunistic buyers across the spectrum. So that there are investors that are looking for core product with 6 to 8% returns. There are value add buyers and a lot of capital out there. And there's certainly plenty of money looking for the 15% and up opportunistic returns in the marketplace.
So you said a lot of the deals this year are on the smaller side. What are the stuff we're seeing this year? When was it originated? When was I've heard some about like the 5-year CMBS coming due, but then I guess there's also some older stuff too. Right,
you're seeing the obvious stuff. So you're seeing the 10-year maturities from the 01 product, right? Excuse me, from the 01 product. And I'm less concerned about that. What you've got there is you don't have deep discounts to value as much as you will with the 05, 06, and 07 product. But you'll have some refinancing challenges on a lot of this stuff, especially the IO stuff on trophy assets that are simply worth a little bit less than they might have been worth in 2001. I think the bigger challenge is the floating rate product and the 5-year product that came out of the 06 and 07 vintage. The reality is that the underwriting standards in 2006 and 7 were entirely different than they were in 2001. So most of what we're seeing that's trouble, that's going to really require some real capital and recapitalization at the asset level is stuff that I think is coming out of the 05 to 07 period.
Okay. And so what are the kind of goals for the company this year? What will be a good year for you?
Right. I would say that it's really twofold. Number one is to make sure that we provide best execution on behalf of our clients, and our client right now is CW Capital and the CMBS trusts. We have a fiduciary to those trusts. CW Capital has a fiduciary to those trusts, and our job at Rockwood is to make sure we get best execution for those. It's a lot of flow. It requires a tremendous amount of attention, some major resources. a bit of drinking from a fire hydrant. There's so much product coming through, so much coming into special servicing every month, so much that needs attention from the asset managers. So, one of our biggest goal of the year is make sure we're getting that best execution. And then on the complement side of that is to work with the market, to get out in the market and make sure that as a business, Rockwood has a goal of growing our third-party businesses, of getting out in front of the aforementioned funds, debt providers, strategic buyers, and making sure that they know that we have this product. This product is coming out of CW CAMS, but also, frankly, participating in a true third-party market to get up to speed on some things going on in the market, to bring our capabilities in the investment sales and mortgage banking businesses to bear.
Great. All right. Well, I want to thank you for stopping by.
All right, great.
And stay tuned for more videos in our series from the MBA conference.
Thanks for having me.